Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video we're going to go through the week ahead analysis. We're going to identify some charts of interest and go through the news this week. So kicking it off with the news, you can see we have a lot of high impact data this week, including several central bank rate decisions coming out of the US, coming out of the UK and Europe. So really big data sets this week. We're going to kick it all off as well with some data out of New Zealand with some unemployment rates. You can see also we have some CAD GDP and some CB consumer confidence out of the US. But I think the big day is going to start, or those sort of high volatility impact news really is going to kick off around about Wednesday, where we do see the FOMC statement and the federal funds rate. You can see that we're expecting a 25 basis points hike here. I don't necessarily see this changing at all. I don't really see in the press conference either the Fed talking about needing to get aggressive. The data that we've seen out of the US recently is showing that the inflation rate is coming down. So I doubt that the Federal Reserve are going to really want to hike even more than 25 basis points in this meeting. I do expect federal funds rate to kind of finish around about the 5% mark. So I do expect another 25 basis points hike after this one. So maybe the FOMC press conference will give us a clue whether we will see 5% interest rates or not. We then have the Bank of England going to hike interest rates from 3.5% to 4%. And that is also likely to happen. I don't see the Bank of England hiking any less than 50 basis points at the moment, so pretty expected data to come out here, as well as in Europe. I actually think Europe is a little bit more interesting than the UK though, because the ECB have recently come out and said that they're willing to continue to hike more aggressively. We are expecting another 50 basis points hike after this one, so we could see the ECB rate around about 3.5%. Now what the press conference will tell us is that if we are going to see 3.5%, then the euro may remain strong. So it's going to be an interesting dynamic considering where sort of the Forex pairs are kind of sitting at the moment. When you look at with regards to sort of euro dollar, which we'll look at in a moment, it's going to be a really interesting week in terms of where the market goes. We then finish the week with some non-farm payroll data. Are expected to see a drop from 223,000 to 193,000. Unemployment rate to rise, and average hourly earnings are expected to stay the same, fairly low at 0.3%. So interesting data as well to come at the end of the week. But a nice high volatility week can often give strength to the likes of the dollar, so it'd be really interesting. Like I said, the yen still pushing to the downside here, so suggesting that we still look for those yen shorts here on the currency strength meter. Pound is still climbing, so maybe looking at pound yen is still something to look at going into this trading week. Kicking it off with euro US dollar then, so you can see that we recently found resistance back at these highs at the 1.09 and a quarter. You can see that we found that resistance and price traded to the downside, and in fact we're kind of trading within a range of this slight bullish channel that you can see I've drawn in, and we recently came into the 1.08.5, and we kind of rejected in and around there on Friday. However, if we trade through these lows, I think we'll probably drop down to the 1.07 and see if price can hold at this point. Now if price then trades through there, then obviously we could look for maybe further downside. We've got the 200 moving average through here on the H4 time frame, which could act as support as well. However, if the dynamics don't really change with regards to the fact that we have ECB being hawkish, okay, which would be positive for the euro, Fed being fairly dovish with regards to rates, that could be bad for the dollar. So really speaking, what we could see this week is a break above the 1.09 and a quarter and a move out of this bullish channel and a move higher. So that's definitely something to keep your eyes on this week. That's why I said it's quite an interesting chart to watch, especially these 1.09 and a quarter highs. Now you can see here, we talked about Aussie US dollar, and we really said it's not really a good time to buy it right now because price has come back into the 0.71 and a quarter there, and we've rejected in and around this area. So I would expect price to maybe come away from this area, maybe even trade down to the 0.7. However, fundamentally, you know, there is a good possibility of price trading through the highs and heading towards the next area of resistance, that 0.7275 handle. The reason being is because as inflation has continued to rise, the RBA may have to hike interest rates more aggressively now, and the fact that the Fed are fairly dovish could mean that price may rally to the upside here, and we may see some sellers getting trapped here. You know, sellers are really probably going to get aggressive at these highs because past history tells us that price has fallen from this area. So, you know, especially retail traders may be getting very aggressively short here. I know we spoke about it, but we haven't quite seen the dynamics yet to actually look for any kind of opportunities short. So we have to be very careful here, because I think a break above this high could really see an accelerated move into the 0.7275. So do be aware of that as well. Pound yen then. So pound yen is currently consolidating at the resistance of 161.50, which makes me think that the selling pressure here isn't really aggressive at the moment. And I think if we trade out of these highs, the next move to 165 is more likely. You can see all this resistance through here previously, and I quite like the fact that if we do trade through this high, we do have sort of a decent gap where there's going to be very low volume, so price may quickly move between that 161.50, even the 162 handle, and move up to 165. So that's going to give you a good 300 pip opportunity there, I think, on pound yen if we do trade through those highs. Finally then, the dollar yen price is going to be definitely an interesting one to watch this week. Price currently trading towards the 131.50 in this sort of bearish channel. I do quite like the idea of price reaching 126.5. Now that's just from a sort of technical point of view. Fundamentally, the yen is weakening at the moment. The dollar and the dollar index is at support. The dollar could benefit from a high impact news week, so I would be watching the 131.50 handle. I think if we trade above that, 134.50 could be targets. Now what I would do though is just sit on my hands. If price kind of trades out of this consolidation, then we, you know, to the downside, then there could be an opportunity to trade to 126.50. However, I would be worried that we would break higher due to the factors we've just spoke about. So going to be a very, very interesting trading week this week. Be very careful. It is a high impact news week, so make sure you take extra care when you're looking for trades and opportunities this week. But I hope you enjoyed this video update. If you did, leave it a thumbs up, subscribe to the YouTube channel to see some more of our Forex trading content, and I'll catch you in the next video.